Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So today we have considered the Australian dollar in the first video instead of the euro currency, just because we do not have any actually new performance on the euro, and today is a holiday in the European Union. So we have decided to take it something different, what we're actually relatively rare considering. So it's Australian dollar, and today, guys, in the gold market I also have take a look on the performance of the gold. I do not see something really interesting there, so mostly we have specified the target. Markets gradually is moving to it, and overall trading range is very small, so I do not see necessity to make any updates today. And to avoid some questions concerning New Zealand dollar, let's take a look at the Kiwi dollar as well, just because the here's setup mostly stands very similar to the Australian dollar, but it still has some few difference, and maybe you will prefer to trade the Kiwi dollar instead of the Australian dollar, because it seems that the entering process on the Kiwi dollar will be a bit more simple. Also, we discussed a few tricky moments that stand here. First of all, let's start from the weekly chart. Here we have the bearish context. Trend stands bearish, and we have the same grabber as on Australian dollar. Bearish grabber, it suggests the taking out of these lows. Theoretically, we could suggest that also in the same way as an Australian dollar, that it might be not just taken out of the lows by the grabber, but it might be some kind of the full size ABCD pattern to the 60 even target, which makes an agreement with the 59 support area. Because inside of this consolidation, you could see it rather accurate. We have the ABCD inside of it, so some kind of the Gartner's triple to sell has been formed. And potentially, if grabber starts working, taking out of this loss, it might be a bit more extended downside continuation behind of the just lower than these lows. What the tricky moment stands? The tricky moment, guys, stands mostly with the shape of the hand and shoulders. Because take a look what really we have. We have here some kind of the left shoulder, head, right arm might be, and in general here you could recognize a really huge bullish engulfing pattern. But at the same time, what I would like to say is that retracement to 60 even, it not necessarily is the break overall bullish construction here, because 618 pullback, even when you have the engulfing pattern, it's normal. So it's pullback inside of the body of the engulfing that happens in most cases, and later market could form A, B, C bottom, more extended D type of action. So this short-term bearish trading scenario doesn't contradict the potential longer-term bullish scenario. It's just becoming the part of it. So it's becoming the retracement of the longer-term bullish context. So this is what we have. But still, we need to keep an eye on what will happen at this point, just I will explain you on the daily chart. So take a look what we have. Here's the hand and shoulders that we are talking about. That is our Gartner's triple to say that I said. And the risk for the setup that we are discussing right now stands with this type of action. So theoretically, it easily might become and turn, for example, to butterfly action, right? So we could get something on this kind. If we will be wrong, market taking out of this top and keep going higher and for completion the butterfly. So that's the risky pattern that might be formed. But why I think that chances for that are not really significant, by a few reasons. First of all, if you'll take a look at the monthly chart, you will see with this type of action to the downside, it has become the reversal month. So we have the downside impulse. Response after the impulse stands in a clear ABCD shape. So it means that this is mostly just a pullback after significant retracement. And take a look at the on the shape of the current action. It's also fast, so it means that this action is mostly the continuation of that one. Besides, when the market is starting surging up, this kind of performance, sharp stop and downside acceleration, it absolutely doesn't fit to idea of the possible upward continuation in the shape of the butterfly. From that standpoint, and based on analysis of the market shape, I would, more tending to idea that's probably this will be downside continuation. And when we have just discussed, making the conclusion and make the decision on this point, here is how you could do the entry. Potentially, let's take a look. We have minor ABCD, OP already is completed, market shows minor pullback, and then take a look at stubbornly stands around the resistance. It doesn't want to go down immediately. I don't know, maybe its support will be broken and the resistance of the bulls will be broken, crushed. But at this point, when the market stands so stubborn, standing around the resistance area, I would suggest that it still might be leg to the XOP target. So it stands around 62.82, and it's also, take a look, it could take the shape of the butterfly to this area. More extended retracement might happen if we will get this ABC bottom D pattern. It makes an agreement with the 63 area and the 63 major resistance. That's why how it would be better to take position in the current circumstances if you make the decision on possible trading short. Most simple way, just do not bother with any ideas of trying catching the final point of the retracement. Split your position. Take the 30% right now. You do not know, maybe market will start to collapse. In this case, you at least will have the 30% of your lot, usual trading lot. Moving higher to the XOP, take the second third. You have the 2/3 around the XOP with initial stop above this area. If somehow still New Zealand dollar will be able to climb right there, you could get the final third of your position around 63, placing stop above it, and just watch what will happen. Once market starts moving down, showing at least the 30% retracement, you could move stops to the break-even. This is most simple way. Other ways are a bit more difficult, so you have to watch for levels and trying to catch the entry. If you decide to take the whole position right there, your initial stop has to be still inside of above this area. It's just because ABCD still could be formed. Major invalidation point will be right there. It's just because this is weekly grubber and this is starting of the downward leg that we're trying to catch the entry. Choose your poison by yourself. Choose the way how you would like to trade it also by yourself. Alternatively, you could not just trying to catch anything. You could wait when the downside action will start and then trying to jump in on some minor pullback. This is also the way how you could act. So, but this is, as you understand, it's a more technical issue. So every trader is deciding by himself how it's better to take the position, because it's has some relation to personality and some personal things how it prefer to take the positions. But in general, overall setup looks really interesting. Let's take a look. It has the big patterns, which stands on the weekly chart. That's really great. And take a look, if market will close somewhere around this area today, we also will get another grabber. So it might be also useful. So let's keep watching. Now we have the two Asia Pacific currencies to watch: is Australian dollar, New Zealand dollar. It's also bring really setups that are worth of our attention.